Good afternoon. Welcome to our weekly livestock market update. I'm Brownfield anchor reporter Megan Grebner. With us to talk livestock markets and all things livestock markets is University of Missouri's Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
All right, as we get
so we'll start on the hog side of the equation this week. Some positive news on that front from a price perspective. Cash hog prices were up $5 for the week with gains every day this week, while that current lean hog futures contract also was up $1 this week as well. When we look at the pork cutout value, up nearly 3 cents this week with strength really across the board in all the cuts. So good week in terms of those cash markets on the pork side. If we change gears and look at what's happening on the cattle side, feeder steers, they traded steady to 5 higher this week, so we got strength there. Yet cash fed cattle down 350 this week, so another tough week for fed cattle markets. When we look at that current live cattle futures contract, it was 5 cents, while the current feeder cattle contract closed up $1. On the choice box beef price, we went down about 3 cents on the choice box beef price with weakness almost across the board in all the cuts.
Scott, as we take a look at those markets, we have talked a lot about this trade rhetoric, and we'll get into that even a little bit more coming up. But are we surprised to see the support in the strength in the hog markets? I know seasonally we are in that time of year where prices are supportive, but there's a lot of negative trade rhetoric when it comes to what potentially could happen in markets for this large supply of pork.
Yeah, so I think it is wise for you to remind us that this has been a good week, and as we look at opportunities to lock in risk, maybe this is the start of an opportunity that might exist, because it certainly looks like to me as we get in the latter stages of 2018, there's more downside risk on hog markets in particular, and you add some of the trade issues that could come on top of what's going to be a 4% increase in pork production for 2018, and it could be a tough ride here at the end of the year. So we do want to be paying attention to those opportunities to lock in some hog prices.
Got a couple of reports out this week. First, let's start with WASDE. Not a lot of corrections or changes to the livestock outlook, but that doesn't necessarily mean that livestock producers shouldn't be paying attention to what came out of that report.
Yeah, absolutely. We really didn't get a lot of changes on the meat side of the complex yet. If we look over on the feed side here for a minute, we continue to see USDA trim on corn and soybean ending stocks. Although we got some parts of the country with pretty good crop conditions right now. I know we have some parts of the country that are starting to see some stress with some dry weather as well. So if we keep tightening those things up, we don't want to forget the opportunity to take advantage of any cuts in feed costs that might be coming along.
And just last week, we talked about how crop conditions in some of the major corn producing areas were on the rise, and it could provide producers some potential to lock in lower input costs.
Yeah, absolutely. So we want to be looking at both sides of that equation. We certainly know pasture conditions continue to deteriorate in cattle country, but on the crop side, especially you get north and a little east of Iowa, I still see some pretty good opportunities there for crops yet this fall.
Let's talk a little retail prices. Any big surprises as we take a look at those numbers this week?
Probably not too big a surprise when we look at what we got for May retail prices. We were down 10 cents. We fell to a little less than $6 a pound for that retail beef price this month. Just to put it in comparison, back in 2017, we would have increased almost 20 cents when we looked at May 2017 relative to the previous year. So very different pattern as we look at the declines that we got in May. On the pork retail price side, and just not a lot of change, sitting there at $3.74 a pound, really unchanged from April, and just slightly above where we were a year ago at this time.
But one of the interesting things is the farmers' share of those retail prices, and that isn't faring as hot.
Yep, big runs of cattle and hogs can certainly make it difficult to keep that farmer share of the retail dollar higher. When you look at the May data that's available to us on the beef side, we've fallen about 5 points May of this year relative to May of a year ago in terms of that farmer's percentage of the consumer dollar. And even on the pork side with those large runs, down about 2% for May of 2018 relative to May of 2017. So big runs of those hogs and cattle have certainly put others in a better position to capture a larger share of that consumer dollar, and they've been doing so.
Consumer confidence came out today, and as we take a look at those numbers, you have to look at them and think that this is a good news, at least on the domestic demand side of things.
Yeah, Megan, absolutely. We don't want to forget that much of what I think's been happening for 2018 has a lot to do with what's been good consumer demand here in the United States. When we look at the June consumer confidence information that we got out today, we came in at an index of 99.3, which is 1.3% higher than where we were a month ago at this time. But maybe most important out of that report, when you look at the current economic conditions, up 5.5% relative to a month ago. Those are some really strong numbers that just points to how good this domestic economy's been as we've grown jobs, seen some wage rate increases. Consumers, I believe, have gotten more confident about where things go. And just to put it in perspective, you look at the year-to-year change here, almost 5% in both the overall index as well as that current economic conditions portion of the index. So we've seen some real strength relative to where we were a year ago at this time.
I was going to ask how maybe the latest jobs report melded or worked in with this consumer confidence.
I think they go hand in hand and actually work together very nicely. And again, I'll keep saying, we have a lot of trade rhetoric going on. Thank goodness we have some strong domestic demand when we're pushing the kinds of beef and pork supplies on the market this year that we are.
All right, let's get into that trade rhetoric. China announced today, we'll take a step back. President Trump announced today they would instill or apply tariffs to Chinese goods. China announced their retaliatory tariffs, $50 billion on U.S. goods. That includes U.S. beef. How does that impact the whole grand scheme of things, especially as China announced yesterday, 20 more USDA facilities would be approved for export into China?
Yeah, so we just keep ramping up the rhetoric at this point, and we know a lot of those tariffs will go in right away here, right after the 1st of July. The 6th of July is when those start. I think there's still time for that to potentially de-escalate, but we're getting a lot closer to where it looks like all-out trade war. And if you think about the things we're doing for both pork and beef in this, I also don't want you to forget that soybeans is on that list as well. That'll be a mixed bag for us in the livestock side of the industry. If we see a lot of soybeans remain in the U.S., have to be crushed, maybe we get some slightly lower feed costs. I don't want to talk about that as too much of a positive, but overall we're going to get effects in different ways depending on where those tariffs are at.
What does agriculture need to take in livestock producers? We talk about Mexico. We know the pork issue, and we know pork is on the retaliatory list. Beef is on the list with China. How does the livestock sector digest this, and can they go on the offensive to manage and mitigate some of that risk if we're potentially looking at large price declines because of a glut in supply?
Yeah, I think it's hard to know how to mitigate risk in this kind of on again, off again environment. It seems to me that it's very tough to decide for sure what this all means at the end of the day. The closer we get to these kinds of $50 billion in retaliatory tariffs taking effect, we all know the impact is not going to be positive for U.S. agriculture. Doing risk management against that, I think, gets very hard when we're sitting here pretty close to the 6th of July. And so I struggle with what the right answer is. I guess the easy answer for all this is, control the things we can in the beef and pork markets. Trade may be outside of those things that individual producers can keep track of. So we certainly want to be least cost in this kind of environment, but probably going to have to hang on through a lot of uncertainty here for the next several weeks.
Definitely sounds like it's going to be a roller coaster of a ride.
I think that's true.
Scott, as we wrap things up today, a little bit of good news. The Senate passed its version of the Farm Bill this week. Majority Leader Mitch McConnell says they'll have that bill brought to the floor most likely before the 4th of July recess. There's still obviously a long way to go. The House has to do their part. They have to conference them together and go from there. But what do we take as livestock producers and some of maybe the funding as we talk about the vaccine bank and using that as even is almost a risk management tool for us?
Yeah, so it's nice to see on the Senate version that we got out of committee this week that that FMD bank will be a part of what's in their bill. I look at overall, whether you look at the House or Senate, and I go from a Title I or commodity perspective, I don't see a from a 14 Farm Bill. So perhaps more of the same in terms of the support we get. We're going to get a lot of discussion and ideas around the SNAP proposals, given that there's so much difference between what the House currently at least passed out of committee and where the Senate is, because there's a lot less work requirements on the Senate side than what passed on the House. But I don't see a lot of those other Title I changes making all that much difference to feed costs for livestock producers.
Scott, as we look ahead to next week, a couple of big reports we're going to be watching.
Absolutely. So we'll get livestock slaughter next Thursday, and then we'll close next week with both look at cold storage as well as cattle on feed. So big into next week.
Scott, I know you're out playing and coaching some baseball today. Hopefully you're staying hydrated and out of the heat a little bit. We'll let you get back to that. Thanks for your time. We'll talk to you next Friday.
Very good, Megan.
So our weekly livestock market update delivered to your email box every Saturday morning. Visit our website, brownfieldagnews.com. Click on subscribe. You can also submit questions and comments there as well. And for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Megan Grebner for Brownfield.